All right, everybody. This is my post-market wrap-up on this Monday, July 22nd. Yeah, still my birthday. And thank you all again. Overwhelming, over-freaking-whelming. I love all of you. I mean that. Anyway, back to business. Sorry I didn't draw any pictures here. Crazy day. Anyway, let's talk about the crazy day here. So, what happened with this stock market? It was all over the place. Very volatile. However, stocks finished positive across the board, but the real shining star of the market today was the tech sector. Now, you'd have to be deaf, dumb, and blind to not understand why tech caught a bid today. China just opened up their, rendition of a tech sector. And it really took off today. So that did pull our tech stocks up with it. We'll see how this plays out moving forward. It should be clear to you that China, despite all the rhetoric, despite all the nonsense and garbage, trade wars and everything else, is really trying to surpass the United States on the global stage. There's a lot of people that talk about a long game. A long game isn't 4 years or 8 years. A long game is decades. And that's the game that China plays. So sadly, we don't know how to do that in America. Again, doesn't matter who sits in the pretty White House, whether it's 4 years or 8 years, that's not a long game by a long shot. China is definitely trying to make a move here. Anyway, so that's why tech took off today. This new NASDAQ market, or NASDAQ style market from China definitely gave tech a boost, but the rest of the market did nothing. The Dow Jones Industrial Average had a 140-point swing today in positive, negative, positive. It was all over the place. S&P pretty much gyrations all over the place as well. So that's the takeaway from how the stock market performed today. But again, the issue is the debt market. I can't stress this enough. And I don't know how many of you had the displeasure of following CNBC, Bloomberg, Fox. Everyone has their opinion here. And it seems without any doubt that the consensus is Fed is going to cut rates. No one knows how much. I'm going to say 25 here. I don't think it's going to do a damn thing at 25. But what it will do is send a psychological signal to the market. We got your back. That's really what it's all about. It's not going to make any difference whatsoever with regard to the economy in any way, shape, or form. But it will send a message to the stock market. We got your back. And again, like I said in the video that I did earlier, a series of cuts are coming. This is one of many. And then the dollar is going to fall under attack big time just to keep stocks propped up. The sad thing really is that we're not allowing the market to do its one and only job. That is to determine fair market value. Markets have cycles. You have boom cycles, you have bust cycles. Now it's just all boom, and that's the side effect or the full effect of a managed market. We do not have any resemblance of a free market or a free market economy in the United States, although we're supposed to be the shining example around the world, and we're getting laughed at. It's really the truth. And I don't know what to tell you. That's where we're at. We got to get used to it because we can't stop it. And in the end, who's going to pay for it? You are, if you're a member of the middle class. And you're going to pay for it big time. I hate to have to say it, but that's the truth. With that said, gold and silver had a nice run today. This is where you need to be. There is no doubt about it. For the long haul, I've been saying this since day one. Bet against the debt. Become your own central bank. With regard to cryptocurrencies, they got hit today. I still think there's upside here, and probably a lot of it with regard to the major cryptos out here. People keep writing to me about it. Anyway, with that said, that's where we're at. Let's watch the freak show play out. It's always fun. It's always interesting. And again, thank you all from the heart for all the birthday wishes. I love you all, and I mean it, and I'll see you in the morning.